Today's guest, Anthony Scaramucci, says Bitcoin will hit $170,000 after the halving, to which I say, why so bearish, man?
We were putting our Bitcoin fund together, and I was looking at dollar volume in the money supply. At that time, it was at 26%. If the stimulus is fully implemented, meaning we had 26% more dollars in circulation than over the past 244 years.
We've been through some crazy times these past few years, but it seems like adoption just keeps chugging along. Some huge names like BlackRock are fully on board now, and it's got me thinking, are we at a tipping point? In this video, we've got tons to break down from an interview with Anthony Scaramucci.
The technology around us would likely improve money.
He's still super bullish long-term, predicting some crazy Bitcoin prices on the horizon. But we'll also look at if there's still more turbulence ahead from past failures. Plus, we'll get into the big political battles happening and what it could mean for bringing in more major players. Stick around, and I'll give you all the juicy insider details. Don't forget to smash that like button if you're feeling bullish and get the comments section buzzing with your thoughts. Let's get into it.
So I just want to go into that with you for 30 seconds. That's a data-dependent prediction. Go back and look at Bitcoin halving cycles. The day that the Bitcoin halves, multiply it by 4, 18 months later, and it's been uncanny that that's been the price of Bitcoin. So I'm using a $35,000 number at the halving. If I'm, and that's conservative. You're correct. That is conservative. Let's say we're at 50,000 in April. Okay, then it's a $200,000 handle. Let's say we're at 60,000, it'll be 240. But my long-term price target is that Bitcoin gets to easily half the market capitalization of gold. Gold now at about 14.5 trillion. If Bitcoin goes to 7 or 8 trillion, that's a 10x from here. It's a $400,000 Bitcoin. And I think it would be ridiculous for people not to understand the asset, not to understand the dynamics of it as a store of value, and not to have a position.
The reasoning is that over time, Bitcoin aims to capture half of gold's massive market cap. Gold is sitting at around $14 trillion right now. So if Bitcoin becomes a true digital store of value and gains more trust from big investors, the math puts it in the $400K range. Insane, right? But Anthony also had an interesting caveat. He said these predictions are based on certain assumptions for how adoption grows over the next few years. But if more big players like pension funds and other Wall Street heavyweights start piling in sooner than expected, all bets are off. We could surpass even a $400K target much faster than any of us anticipate. Crazy to think about. But that's what potential we're dealing with in this space.
I'm sure there will be things in the future we can't predict.
Yeah.
Let me reframe that. Do you think we're done with the last cycle of contagion and bad actors, or do you think that there's more shoes that could drop?
I don't think we're done, because I think there's still an unwind of inventory that has to take place with things like FTX, some of the issues related to Genesis, and a few other things that are out there. I do think that there's still inventory. Now, the rumor, not necessarily a rumor because it's more or less been confirmed now, that $1 billion of FTX GBTC was liquidated in the last week. And I think that cleared out the GBTC, but they own a ton of Solana. They own a ton of other assets. I think you have still some leverage in the mix between the arbitrage situation with GBTC and Genesis. I think that also potentially has to be unwound. But if you're saying to me, by the halving, which is, let's call it mid to late April, by the halving, will we be done with the exegesis of the last cycle? I believe that we will be. Are we down to the remnants of the exegesis of the last cycle? I believe that we are.
After the bloodbath that was last year, I'm sure a lot of people weren't expecting that kind of comeback. But it goes to show that the strong projects tend to weather the storms. While others were panicking and abandoning ship, those who held strong are reaping the rewards now. It just goes to reinforce having that long-term vision in this space. The bull and bear cycles will come and go. but staying true to solid fundamentals tends to pay off over the long haul.
It's a very complex thing right now, but the number one thing that I would recommend to people is have some defensive things in there. I personally think Bitcoin is a long-term hedge. If you really understand Bitcoin, you'll recognize why places like Morgan Stanley are coming into the space. It's a scarce asset. And as we were talking about last time I was on the show, that supply-demand imbalance plus the impregnability of the blockchain is going to make that asset very attractive in a world printing money like this.
While ETFs help make crypto more palatable and accessible to big money, many major banks, asset managers, and corporations are still in the learning phase. Anthony pointed out names like JP Morgan Chase. While they're developing blockchain tech, the CEO, Jamie Dimon, remains stubbornly critical.
Going to zero and it's fake?
Bitcoin itself is a hyped up fraud. It's a pet rock.
You're back to that?
Yeah,
Really?
Of course, yeah.
But the message is, it takes time. Even Larry Fink at BlackRock was once dismissing Bitcoin before doing a 180. So crypto still has an education battle ahead in winning over all the traditional giants. Once they do their research, though, Anthony says it tends to be a one-way ticket where they don't turn back. Exciting times ahead as the big players continue getting with the program.
You have lots of investors that went into the Grayscale Bitcoin Trust at 2%. They bought it at the Bitcoin at 50,000, 60,000, 69,000. And so when the ETF became available and they were able to sell the Grayscale Bitcoin Trust and take a loss for tax purposes, and you guys know this, they have to wait 30 days before they can reload. But it's a great arbitrage for these people. They can go from a 2% trust into a 21 basis point ETF, and they have to wait, and there's a lot of churn and a lot of volume churn as a result of that. But I think generally the notion that this is an asset class that's here to stay, people like Abigail Johnson at Fidelity and Larry Fink are working on it at BlackRock, I think is great for the industry.
Think about it. When you've got billions of dollars under management, it takes serious conviction to move that kind of capital into a speculative new asset. But these institutions aren't in the business of making rash decisions either. They've run the numbers and see that believing in the long-term vision is the ultimate strategy regardless of short-term FUD. In a way, it's reassuring knowing that even during the bear market bloodbaths, you've still got titans like BlackRock hanging tight. They're not in this today trade. Once major FOMO kicks in at the institutions, there may really be no stopping this crypto train.
What I will say is that we've overly politicized regulation in the country, and I would love to see the SEC move to a more nonpartisan, non-political standard the way the Fed is. And I'm wondering if that could ever happen, because every time we get a new president and we get a right-leaning president or a left-leaning president, we bring somebody in that politicizes the regulation. That's very bad for the industry.
So you think that the SEC's reluctance to really put a stamp of approval on crypto products has been a political stance?
No question. Yeah, this is all born from Elizabeth Warren. She cut a deal with Joe Biden in 2020. She dropped out of the race in exchange for having a lot of say over what happens in the banking industry and the world of financial services. And so she was part of selecting Janet Yellen, and obviously her sidekick in Washington is Gary Gensler. And I call them the regulatory axis of evil, because they're not studying the protocols, they're not studying the technology, they're making these symbolic statements. They're like, oh, this is about fraud, this is about money laundering, where it's not saying that there isn't some money laundering and fraud, but there certainly is. There's more of it with the US dollar, by the way. And I just think the point is, if they calm down and really study the technology, they'd be running towards the technology.
So the challenges remain, but we're also seeing some glimmers of progress. The hope is over time, data and experience will help bring more aligned, nuanced rules here in the US too. But in the short term, expect regulatory tensions to continue as all these different philosophies clash. Anthony's take is that as long as innovation isn't shut out entirely, the underlying crypto tech will remain resilient and find routes to development one way or another. It's a balancing act, but the potential is too big to be ignored forever.
I don't think we're done, because I think there's still an unwind of inventory that has to take place with things like FTX, some of the issues related to Genesis, and a few other things that are out there. I do think that there's still inventory. Now, the rumor, not necessarily a rumor because it's more or less been confirmed now, that $1 billion of FTX GBTC was liquidated in the last week. And I think that cleared out the GBTC, but they own a ton of Solana. They own a ton of other assets. I think you have still some leverage in the mix between the arbitrage situation with GBTC and Genesis. I think that also potentially has to be unwound. But if you're saying to me, by the halving, which is, let's call it mid to late April, by the halving, will we be done with the exegesis of the last cycle? I believe that we will be. Are we down to the remnants of the exegesis of the last cycle? I believe that we are.
Moving on, a lot of dominoes fell as a result of that implosion, and we don't have a full picture yet of all the fallout. But the takeaway was that hopefully the worst is in the rearview mirror now. A lot of the instability seems to have flushed through the system after the crash, and now things are settling at a lower baseline. Of course, crazier things have happened, so nothing is ever certain. But it does feel like we've made it through the initial shockwaves, and the space is back on more stable footing as a result. Those repeated stress tests are helping separate the wheat from the chaff project-wise too. Just means we're all a little wiser heading into the next leg of growth. All right, crypto fam, a lot to digest as always in these market updates. Thanks so much for hanging out with me until the end of the video. If you enjoyed all the juicy insights, don't forget to smash that like button below, and be sure to subscribe and turn on all notifications so you don't miss any of our future episodes. Also, come join our community over on the Coingraphy Telegram group, where we share intel on new projects, trading strategies, and more.